Yeah, so this deal in particular had a lot of interesting buyers. It was very competitive, but it had a flaw. The deal was a landlord that was pocketing a lot of cash in their rents, that was not showing accurate income for a very long time. So it discouraged a lot of traditional buyers, the buyers that needed their accurate trailing 12, their accurate income statements, their bank statements. So this in particular scared a lot of buyers away. It was definitely not a deal that you could take to the bank to finance because of that. So that's how we were able to get an edge in buying this deal.
Welcome to Real Estate Deal Closers with Anette, Talie, where we focus on the deals. Our guests are real estate closers who will share in detail the whole process from finding a deal to closing it, as well as strategies and tips to help you do the same. Here's your host, Anette Talie.
Welcome to another episode of Real Estate Deal Closers. I am your host, Anette Talie, and my guest today is Abiel Ballesteros. Welcome, Abiel.
Hi, thank you for having me.
I am super excited to have you here today. Abiel is one of my partners on my first syndication, and we're super excited about this project in Ohio. And it's been such a great experience so far working with you and your team on this syndication. So I'm excited to share with my audience your one deal that you're going to share with us today. But you know, before we start, let me give you a little bit about Abiel. So he started in real estate in 2005 as a property appraiser, while simultaneously investing in residential single-family home sector. After flipping over 200 single-family homes and a decade of residential sales, he transitions into multifamily investments and syndication. With his diverse experience in rehabilitation of properties and asset management, Abiel has raised over $60 million since opening his management company and a real estate investment and syndication in 2012. Abiel controls $30 million in real estate assets and a real estate portfolio of over 200 units and properties. He manages in-house and does construction and renovation, all in-house. So Abiel is part of the company SR Apartment Capital LLC. Welcome, Abiel. So tell me, how did you get into real estate? What was the thing that got you into like, I gotta invest?
You know what? That came from having multiple jobs. I was working from the age of 16 all the way to the age of 25, and I can't even tell you. I lost count how many jobs I had. It came out of frustration of being in the corporate world and hospitality, and just always had that itch, like, what if I could do something on my own? What can I do on my own? And then real estate was always in the back of my mind. I grew up with a father that was always doing construction and maintenance and repairs and rehabs. And I would see these contractors and I would see these owners hire him. And I would grow up around him fixing up these beautiful homes. And it came from that. I saw that. I just didn't understand the other side of the business. And that's how I kind of fell into the real estate appraisal business. I had a good friend of mine. I was doing appraisals. And I got introduced to the world of understanding values first. And then from there on, it led on to the path of investing.
Wow, that's awesome.
Yeah.
The deal.
All right. So what deal are we going to talk about today?
We could talk about a deal that we did about a year ago. I would say about a year and a half ago. It was an interesting deal. It was a portfolio of 8 properties in a neighborhood here in Miami called Little Havana.
Ooh, Little Havana is on fire.
Yeah.
I've been getting deals like this entire week. I've been getting a bunch of stuff of Little Havana. And you know, when I came to the United States 20 years ago, I lived really close to Little Havana. Okay. So
awesome. Yeah, it's a little pocket right next to Brickell. It's a couple blocks away from one of the hottest markets in South Florida. Everyone knows downtown Miami, Brickell. And this transaction was interesting. It was a portfolio of 103 units divided into 8 properties. They were all 1920 buildings. All had different types of remodeling. Some were original. The deal was pitched to us at 14 million at first.
Wow. So hold on a second. Let's go little by little. So what type of asset was it?
This is a Class C. I
Class
mean,
C.
technically, if you want to call it by the age of the property, it wouldn't fall under Class C because it's a 1920 construction build. But we're gonna call it a Class C because of the neighborhood. It's a working class neighborhood.
All right, perfect. All right, so how did you find this deal?
The deal came through word of mouth. It was I was shopping really hard this neighborhood. I was farming it as a broker and also as a syndicator. It came to our hands by an agent. It was an off-market listing. The sellers were ready to exit. They had purchased these properties at a really great price in 2008. Did the minimum work. Some were updated, some weren't. Did the minimum work, and they did a great exit with us, but they also left a lot of meat on the bone for us.
That's awesome. So you mentioned something very important. So you got it from it was a pocket listing from a listing agent.
Yes.
So you had to have a relationship with this person for them to send it to you and not to somebody else.
Correct. So yeah, it came through. It was being shopped around off market. The selling agent is a very educated commercial broker. So he knew his market. He knew he was reaching out to the right people.
Awesome. I think that's one thing that, as new investors, we got to work on, getting in these relationships with reputable agents so that when they have deals, they share them with us, right? How many units did you have before this property, before you acquired this property?
It would fluctuate because I was in the business of flipping a lot. I was buying and holding for very short periods of time, sometimes not even a couple months. So I would fluctuate from 240 to 100. Like in a month, I could have half of the portfolio that I had the previous month. It's a life of a flipper, which I always express to everyone that it's a very stressful life, which is what led me to the path of syndication and, with the strategy of buying, holding, and refinancing. Much better model.
Yeah, flipping, I know it's very profitable, but it's always scared me a little bit because, I always think like, what if I buy it and then when it's time to sell, I can't, so yeah. It's like, because of the market, it goes up and down. I'm much more comfortable with buying and holding, long term. And that's the, how I started.
I agree. Yeah. So this deal in particular, had a lot of interesting buyers. It was very competitive, but it had a flaw. The deal was a landlord that was pocketing a lot of cash on their rents, that was not showing accurate income for a very long time. So it discouraged a lot of traditional buyers, the buyers that needed their accurate trailing 12, their accurate income statements, their bank statements. So this in particular scared a lot of buyers away. It was definitely not a deal that you could take to the bank to finance because of that. So that's how we were able to get an edge in buying this deal.
So that's very important because a lot of people, if they need financing, they are going to need all those documents, the T12, and, they need all this documented income so that the bank will lend them the money.
That's correct.
Right. Correct. So, all right. So what was the listing price?
It was 12 million. It was 14 million.
14 million. And how much did you get it for?
10,450,000.
Awesome. That is amazing discount. So how did you negotiate this discount?
The discount came from just like just beating down the seller. Once we saw that the type of financials he was presenting, we knew off the bat that he was going to eliminate a big chunk of competition. So we knew that there was a very specific type of buyer for him. And not anyone could just come up with $10.4 million in cash to close this type of asset. So once we had that leverage, we're like, okay, his financials are not accurate. He's holding on to cash. How do we even believe him? His property management was in-house. They were organized as managers, just a lot of fishy stuff that would have scared any traditional investor. So as we knew more about the deal, the more information we had, the more confident we got that we could buy this deal.
Awesome. Yeah. So you realized then that you could start to negotiate. So did you negotiate based on the financials, or also like repairs needed, or, what type of negotiations did you get?
Yeah, definitely was a combination of that. After we went into contract, that we convinced them on we actually asked for a $200,000 price reduction after we did inspection. We knew that the buildings, if you're not familiar with what it takes to remodel a 1920 building, they're full of surprises. It's 100 years of owners doing all their little rehabs and covering patches and floors on top of floors and termite damage. And so, we knew that we needed to get a discount because they're really hard to underwrite on the construction side. You could think that you got an accurate construction on it, but then once you start getting into removing stuff that you don't see in inspection reports, you're going to be full of surprises.
Absolutely. You bring a very good point. When you are dealing with old properties like this one, you have to really have a little bit of a cushion to, for all the unforeseen conditions, right? You want to move a wall, and then once you open it up, you find that all the wood behind the wall is completely rot, and then you have to not only move the wall but open up and replace. And my mentor always would say, like, don't open anything that you don't need to open, because you're gonna find stuff you don't want to see.
Yeah. Oh yeah, definitely. That is definitely something that you would see in old buildings. I agree.
Right. Awesome. All right, so how did you fund this deal, and how did you finance it?
So the deal was, we had to close the property cash. So it was an interesting, I knew that the numbers made sense. I'd used this strategy in the past where I've always thought that if the deal's good enough, the money will come up, it would appear. It's very stressful to go into a deal that way. I knew I had a good partner of mine, Louis, Merbeck and Gerardo, that they're good syndicators, strong investors, experienced. I knew I had their support for a portion of the funds, but I was short on the rest of the funds. I started shopping around bridge lenders. I did give myself cushion on the deal. We had a 30-day inspection period.
Mm-hmm.
After that, we put 60 days to close. So we had a total of 90 days. So within those 30 days, I was running, scrambling, doing reports, inspection, raising money. And that's how my partners that are currently right now, I created SA Apartment Capital. That's how the partnership started. That's how Sam and Renee connected with each other. Renee introduced Renee to the deal. He saw the deal, he liked it. And then from there on, we were able to do a bridge loan and close it all cash.
All right. So for people that don't know, what is a bridge loan and how does it work?
In this particular deal, our investor that participated as an equity investor also participated as the bridge lender. So it was a win-win for him. He came in as a bridge lender, charges a percentage and a point at closing, and then he participated on the equity side, and then I raised the other equity side with my partners. So the bridge loan was for 18 months. Okay,
so it's a higher interest loan, but for a short period of time. And so that gives you time to turn the property around, to remodel it, so that then you can finance it with regular debt. Is that the goal?
That is correct. So the goal actually on this asset was to sell off the properties that we didn't want, use the equity, because we knew we had a lot of equity when we bought the deal. We knew that if these properties were marketed separately instead of a package deal, we could get the equity, the capital, and bring down our debt. And that's what we did. So out of the 8 properties, we kept 3. We sold 5 as is. We did no repairs to them. We made a profit on those, used the profits to rehab the other ones, and we refinanced. Out of those 3, we refinanced 2, and now in the process of refinancing the 3rd one.
Amazing.
Yeah.
Amazing. So So what's your exit strategy on those three that you kept?
So two, we did a Freddie Mac refinance. We remodeled them, fixed them up, increased the rents. When we bought these assets, the one bedrooms are renting for 700, 750. We knew that the market rents in that neighborhood were 1100.
Wow.
And yeah, and we actually hit that target and even above that target to 1150 on all our units. So that we were happy to see that. But the rehabs were extensive and they were done with permits. So it was challenging. It was challenging.
Right. So one thing that I want to go back to is the underwriting, because you were talking about how not the guy didn't have the seller didn't have the financials for you for a proper underwriting. So how did you uh, safeguard yourself? What type of how did you do the underwriting in this case where you didn't? How did you confirm that what he was telling you was the truth?
Well, you know what? It's we met with the seller multiple times. He was a very friendly person. It was also a lot of communication. He was very communicative. He did show us a lot of money orders. He, in fact, actually would bring us into his office and show us all the cash rents that were coming in. It was a lot of cash, a lot of money orders. He was very open about that, so that made us feel comfortable. He wasn't being sneaky about that. So what he as during those 30 days of inspection, the relationship got better. The more I got to know him, the more I got to know his business. I saw that he was an honest seller. He just wasn't. His financials on his bank statements were different, but he was collecting these rents. He just had another way of doing it. So what scared off people in the beginning, and for them not making an effort to really go into a deal and get to know a seller, is what was our benefit. Once we got to know him, we got to know his property manager. I've been with him for 10 years. We're like, all right, these are honest people. This is the way they do business. They have things off the books, and that made us feel comfortable. Okay, all right, the properties, they were about 95% occupied consistently. So that's how we felt more comfortable with the deal.
Awesome. And so tell me a little bit about, SAR or SAR apartments. You said that this deal brought you and your partners together and then you created this company. So tell me a little bit about that, because I think, one of the things that I hear a lot every time that I go to a conference or I go to a meetup, is people looking for partners, right?
Yeah.
And it's so hard to find the right people to be able to have the same work ethic and that have the same goals and that you just get along with, right?
Yeah. So that came out of that year of executing our game plan on those buildings. Me and my partners, Sam and Renee, got to know each other throughout that process. And the more I saw what they were doing, what I was doing, and what they had done and what I had done, just got me motivated, saying, look, guys, I see what you're doing. I see what you've done in the past. I need to learn more from you guys, but I also know how I could help you guys too. And I know what I could put in front of you that will make your life easier. And I know what assets I could bring so we could do this in a bigger level. And that's how the company was created, with just a single vision of buying Class C apartments, Atlanta, Florida, Ohio, and other states that we have on our target that we would like to buy. I always call my partners LeBron James and Michael Jordan, and I'll probably put myself as Dwayne Wade. But I always wanted to put that team together. I always tell them that's how I feel they are.
That's awesome. And, it's so important what you're saying, bringing value to a team, right? Like you not only were looking for what they could give you, but what you could bring to the team. And I think that's how I also, partner up with you guys, because, I was talking with one of our other partners with Wade, and I was sharing, talking about, doing something together. And like I offered my help with marketing, which is something that they were lacking at the time. And I'm like, I can help you with this. And he knew that I was already working really hard to get into a syndication and that I could raise capital. So I brought that value to the team, and that's how you form an amazing team. And I am super excited about the progress that we're having on the property in Ohio. I can't wait to go there. I had to change my travel arrangements once already, but probably in the
It's a
next
beautiful
month.
time to go to Ohio right now. It's beautiful. It's fall season, so it's beautiful right now.
Amazing. All right, Abiel, what books or what audiobooks are you listening to lately?
Ooh, I'm gonna have to check right now. So I can tell you right now one that I'm listening to. All right, let me pull that.
I put you there on the spot because I forgot to tell you one question. But
Yeah.
I'm the type of person that if I am reading a hardcover, like I fall asleep. So
I'll be honest with you. I'm not a hardcover guy. I have a huge collection of books on audiobook. I've mentioned it to be like I am an audiobook. I love it. It's my thing. I'll tell you one that I just finished reading is Atomic Habits. Really popular. Yeah, James Clear. That's very popular. I just got into one that I love, and it's Born to Run. It's a very inspiring book. It's inspiring. It has nothing to do about business, but it has to do a lot about self-discipline that you could get from just running a lot. And then those are my two favorite books right now.
Awesome. Yeah, I have to say, since I found Audible, I've been listening to a bunch of books, and last year I did like 6 books, and that's like the most I've read in my life before. Like seriously, I would read like the summary of a book before, but now it's just so nice to especially when you're driving a lot. You have all that time that you're by yourself, and you can be listening to a book and learning something new.
Yeah, 100%. I do it all the time. I travel a lot to our properties in Jacksonville, and whenever I think about that 5-hour ride, I'm like, all right, I think I'm gonna knock out a book, and I just plug it in. Yeah, it works.
Absolutely.
Productivity hack.
All right, so let's talk about your productivity hack. So what is that one thing that you have implemented in your business that has helped you to grow it exponentially?
Hiring a virtual assistant.
Wow.
That is by far the best thing that anyone could do to create so much more productivity.
Amazing.
Expert tips.
All right, so we are actually going to talk about on our 3 expert tips on how to delegate to a VA. And you told me like 3 different things that you get your VA to do, and you have more things that she helps you with, but these are the top things that she helps you with. So tell me.
Number one thing right now that my VA is helping me with is underwriting deals. Basically, you got to take the time to train your VA on underwriting deals for you. So if you're in the multifamily business, one of the most important things is, getting the income statements, the rent rolls, the marketing package, getting all that information and systemizing it where your VA puts it on your cash flow model analysis that you create. And that way they plug in all this information for you. If you even teach them correctly, they can even help you. They could do a lot of research for you on what the tax increase would be after you purchase your properties on your pro forma, research the rents on your pro forma. This will save you a ton of time. By the time it's in front of you, everything's plugged in, ready for you just to tweak it and play with the numbers to see what your offer is going to do. That is the only way that you're going to be able to maximize. You need to put a lot of offers out there to get one deal. So that is by far one of the best things that you could do with a VA.
So how long did you take before having a VA to analyze one deal?
I mean, it depends. I mean, we're analyzing big deals. We're analyzing 100, 200, 300 units. We analyzed recently 1,300 units that I spoke to you about. So a lot of these deals will take hours out of your day, and especially to take that much time underwriting a deal. And by the time you submit your offer is not even close to what it's gonna to the competitors. It's very discouraging. So if you really look at the numbers, I look back at my history of offers, like you gotta underwrite over 100 offers to maybe get 1 or 2 good deals. So it's not easy. And then plus on top of that, you're talking to these agents or to these sellers while you're preparing these offers. So it's very time consuming. So VA could help you out tremendously on that.
Amazing. Okay, what's the number 2 expert tip?
Use your VA to help you hire other VAs. So if you have website marketing, social media, advertising, you can use your VA to manage those other VAs and those other tasks that they can't handle. So my VA helps me out with hiring other VAs for other tasks that we have.
So did you train your VA to do this? Do you have like certain standards, or did she already have this experience?
I was very fortunate that I found a VA that she's amazingly talented. She is great. She came with a background of management, so it was very easy. She picked it up really fast. She picks up everything very fast. Very happy with it.
Awesome. All right. What's the number 3?
Number 3 is having your VA help you hire on your operations. I use our VA helps us hire project managers, construction workers, everything from interviewing them from the beginning to first interview, second interview. My VA has helped us hire a lot of employees for our projects throughout the country.
Right. So she does the advertising for the job opening. Then she screens them, and then, you know, if you get 1,000 applications, then she picks the best 100, and then she goes to an interview, and then you only get the top people.
That is 100% correct. That's exactly the process. She would post the listing for the position. She would screen out the resumes that are not what we're looking for. She would do the first interview. We also do an exam, so we make them take an exam. After the exam, then I do the interview, or my property managers or my project managers that are on the site with it.
What type of exam?
There's an employee exam.
Oh.
Yeah. So we just hired recently a project manager. The project manager took a project manager exam, and that's how you could get it's like a personality test. See how
amazing. Awesome. All right. Thank you so much for that. I am on the track of getting a VA to help me with some stuff. So I think it's a little bit frustrating because at the beginning, it does take more time, to get your systems going and to teach them what you want them to do. But once you have it set up, then, it multiplies because you're not spending all that time doing it yourself.
The trick that I use for any type of training that you want to do with your VA is, because let's say you're unlucky and you hire a VA and then you lose that VA in 2 or 3 weeks, then you got to do this all over again. I would record every training session. So I know you like to use Asana, but what you could do is record on Zoom videos. You record every station, like almost 90% of all my conversations with my VA are recorded. So that way you don't have to ask you a question again. It makes their life easier. So that is the number 1 trick, is anything that you're going to train them on, including underwriting or anything like that, you record the session, you file it. If that VA leaves you, they can always go back and watch that training video.
Absolutely. That is a great tip. All right. So for people that want to contact you and look you up on social media, tell us how can they contact you and what's your social media?
Yeah, they can contact us at info@sarapartmentcapital.com. And like I mentioned, that's our new venture created by me and my partners. And this is the company that's going to continue buying Class C apartment buildings. And we're very excited for the deals that are coming up.
And you have a very specific requirement. 100 units or more, correct?
Yes, that's our target, 100 units or more. And it's just because it's easier to manage and the expenses and all that comes from having 100 or more doors.
All right. Thank you so much, Abiel. This was an amazing conversation. It brought me back to my time living in Miami near Little Havana. I'm sure the little house where I lived is worth $1 million right now.
Yeah, it's crazy. That's his pocket.
Thank you, everybody. And please don't forget to subscribe and like the podcast or the YouTube channel. Thank you so much.
Thank you. Bye.
This was Real Estate Deal Closers with Anette Talie, brought to you by Talie Investments. We hope that you enjoyed this episode. Our goal is to provide amazing value on your real estate journey. Connect online at www.talieinvestments.com, where you can find this episode and more. Did you like this episode? Subscribe, like, and share.